Hello, good evening everybody. Myself Dr. Stokes. Today I am going to speak about two reputed companies which are listed 4 years before in 2021. One is Zomato, other is Paytm. Zomato market cap is 3.3 lakhs crore. Paytm is 82,250 crores market cap. Uniqueness is of both the companies. Both have given a quarterly results just few days back. Zomato has given 65 crores quarterly profit and Paytm has given 21 crores quarterly profit. So valuation says that the profit which those both the companies have made is far less than 1% of their market cap. So the valuations are too high to even invest in such companies at present level. But there is a mutual fund house which has invested its investors' money, SIP done by the retailers in such high value companies few months back, and they are holding at very high concentration in their respectable and respective mutual fund schemes. Yes, this mutual fund house is Helios, which is run by Samir Arora, who is a Singaporean person, investor, and he has been investing in Indian stock market from 2000 before. What is uniqueness about this Samir Arora Helios Mutual Fund House? It runs a two mutual fund schemes. One is a Helios Flexi Cap Mutual Fund, other is Helios Large and Mid Cap Fund. Both this scheme have invested in Zomato and Paytm respectively for 4% and above and 3% and above in their both the schemes. This percentage depend upon AUM of the respective mutual fund schemes. Why I am saying all this? If you see Helios FlexiCap Mutual Fund, its total AUM is just an inception, and they have invested in Zomato around what I can say 4.24% at that valuations, and in Paytm it has invested 3.95%. So these are very high valued investments where the company has hardly performed their profits for even 1% of their market cap. Other is Helios FlexiCap Mutual Fund Scheme, where they have invested in Zomato 4.26% and Paytm 3.13% of their AUM. Now, whose money is invested in such high value companies? These are the retailers' money which they have done SIPs. Helios Mutual Fund House is going in a market saying that they are making returns better than the existing market caps mutual funds, but this is not true. The company's scheme investment inceptions has been just few months back, and their investments are in very high valuations market cap companies where I don't personally see any huge return going to come in coming quarters. Although these companies have given loss of reductions in their quarterly losses, but profit is hardly even a 1%. Will you invest in such companies where the quarterly profit hardly beats the 1% and 2% of market cap? I said no. If I personally don't invest in such companies, why should my SIPs should invest in such companies? Retail investors should definitely look after their SIPs where this SIP money is going around. They should not do investments in such schemes where their funds, their hard-earned money are invested, where in coming days even the company makes 10 times of their profit margin from here, their SIP returns won't even generate nifty benchmark returns. They can't hardly beat FD returns. Even the shares of these companies goes around for 10 to 20% in uptrend. Mutual fund house hardly beat their benchmark. So invest in such mutual funds schemes I won't suggest. This is my personal opinion. Do own research and analysis before investment in mutual funds, because mutual funds are subjected to market risk. Thank you.